Okay, for Sembcorp, right, I just went into the website. So for usually when it comes to FA, right, you need to know what is the corporate profile of the company like. So for Sembcorp, right, if you go to the investor relations website and you go to the our businesses, right, you will see that they are in the energy and the urban business. So last time they have Sembcorp Marine, but I think they have already updated their website such that they have really carved out the marine, the oil and gas business. So from the looks of things, right, when you just purely look at their business model over here, energy production is more like a utility, very stable, recurring kind of model. And same goes for the urban. When it comes to the land development and property development, it is a pretty, if I were to sum up, right, it's a pretty stable business with recurring cash flows. And now, if you were to go to shareinvestor.com, right, and maybe let me just go to Sembcorp. And we take a look at, let's say if you have no idea how if you, let's say you want to analyze a new stock and you have no idea how to go about doing that, you can actually go to the fact sheet first and just maybe search for the company. Then when you click view, okay, from here I can straight away see the 1 year share price chart, right? Sembcorp Industry actually, after the adjustment from after adjusting away the marine business, right, the share price shot up like almost 100%. Yeah. But if you look at the past financial results, based on this proprietary tool in Share Investor, we have this financial analysis tool that take all the financial data and then put it into this pictorial form. So you can see all the smiley faces over here, and you can see from the legend, you will want to have more green faces, so excellent and good metrics, as opposed to be alert and watch out over here. And from just one glance, right, you can see Sembcorp Industry is actually in a pretty bad shape. So, be it the profit growth or the dividend is, decreasing over the past 5 years. Can you see? Let me just zoom in. They have a high debt to equity and it's negative free cash flow. So net earnings margin is also low. So when you look at this, you may be wondering, oh, how come the share price can go up so much? It's because um, the Sembcorp Marine, right, has all along been a drag for Sembcorp Industries. And now you probably want to know whether there is a growth prospects for Sembcorp Industry. So let me just go to their the financials. And because Sembcorp Industry, right, when you look at their business model, it's kind of like a asset heavy business. So that's why when we want to go about analyzing whether Sembcorp Industry is in a good valuation right now, we can go down to look at the price to book ratio and we look at the history. So from here, okay, just from this chart itself, right, you can see that the price over NAV of Sembcorp Industry has declined over the years. So last time it was used to be 2 times price to book as of FY 2011. Then now, trailing 12 months, their price to NAV is only at 0.6 times. And this is at a 10-year low. So this is probably the reason why a lot of them have re-rated. So if you go and read up on the analyst reports for Sembcorp Industry, right, I think many analysts have re-rated Sembcorp Industry after the marine business has been carved out. Right now, it is a stable kind of a business with very low valuations of a 0.6 times price to book ratio. So while the FA part cannot maybe give a good picture of how Sembcorp industry can perform in the future, you can look at the TA part or the growth prospects of Sembcorp industry. So with that, right, let me just hand over to Sing Fu while he will share the TA portion on whether Sembcorp industry has more growth. Yeah.
Okay, thank you, James. All right. We actually have shortlisted 10 stocks to talk about. So I prepared all the material for 10 of them. So since we're covering Sembcorp industry, this is what I have. Now, just as James said, sometime in June, right about here, Sembcorp actually announced a demerger of Submarine. Okay, so this is where the price jumped up from here to here. And thereafter, there was a sideways trading trend because people are waiting for the shareholders' approval. And finally, on the 9th of September, the demerger, the formal demerger came along. This is exactly where Submarine was hyped off from Sembcorp, and thereafter the price had a big jump. Okay, so incidentally, actually, I have I did traded the stocks for the past 2 months or so, 2-3 months or so on the news. So if you have attended our first webinar sometime on the 29th of October, we talk about having catalysts. This is one major catalyst that happened to Sembcorp. Okay, so acting on a catalyst using my methodology, I actually traded on the share, and it actually had a good run. Okay, from around $1, the share went up to almost 140 something over here. Right, this box over here, I'll talk about it more later. And then it went on to trade higher until 170. So within a short period of say 2 months since the former demerger, the share has gone up almost 70%. Okay, of course, you measure back to when the merger was formally announced, the share price almost more than double. Okay, that was a good run and one of the good trades I had this year. Now, all right, you see a lot of lines drawn on the second window here, and some people who attended the first webinar, like here, all these red and green bars, you understand these are volume bars. And this line over here is another indicator. So there are two indicators I plot below here. Now, I don't have time because of this workshop, or rather this webinar is pretty short, to explain how all these indicators work. So if you're interested, actually, you can look out for a workshop, the bootcamp we're going to organize. And if you're keen to learn, we'll let you know more later on. All right, so using the indicators, right, what I can see here is that the buy volume currently is still very healthy. Look at all these volume bars. The green color are the buy volume, red color is sell volume, and they are generally higher than red color bar. The green bars are higher than red color bars, meaning the buy volume is pretty strong. Buyers are still accumulating the stock, whereas sellers are not so much. Okay, and given the after the demerger news, all right, the share actually shot up to almost 140. Now it went into a sideways trading trend. This is very common for sharply rising stock. Okay, so most people will have sold around here because once you make about $1 to 140, you're quite happy to take a 40% profit. But I stayed on because of some indicators that I see, which actually give me conviction that actually the trend will continue. Right, so given the methodology I had, right, I actually held on to the stock almost up to about $1.62. And I think the last webinar, somebody asked me, what is Sembcorp doing and how should he react now? Right, so it was carried around, we had a webinar around here on the 29th of October. I mentioned that the share is still strong and it's still very, volume is still good and it's still strong. And there's no indication there's any change in trend yet. So that's how using my methodology, I actually stay on with the share. All right, so I took some profit because of certain indications that I see around here. Okay, but I'm still holding on to the balance of the share, which I'm quite happy with it. So there again, what most important is that you have to ride the rally and maximize profit. So most investors or trader who don't do well in the portfolio is that they hang on to losses, but they fail to capitalize on the profit. So maybe people might take the contra away a profitable position, but they'll tend to hang on to losing position. So this is not what we want to do. Okay, so so my conclusion in on Sembcorp is that the buy volume is still healthy. The uptrend momentum is still there, and it's still a very story to hold on to. All right, so I'll pass back to James.
Okay, you can see the screen, right? So okay, so Venture Corp, let me just jump into their corporate profile first. So same thing, you need to understand what they are doing, and from the looks of things, they are a sort of a semiconductor firm. You know, they are quite a big scale in the sense that they have 30 companies with clusters all around the world and employs over 12,000 people. So I'm not going to dive deep into their economic mode or what kind of technology they have, the R&D and things like that. I'm just going to share their financials right here. Okay, you can see Venture Corp, right? You can see, right? Okay, so Venture Corp, in the past 9 years, so from year 2012 to the current trailing 12 months, June 2020, revenue has been on a rather steady uptrend. So revenue is this blue color bar over here. Okay, let me just zoom in if you cannot see. Okay, this one is the revenue bar. So you can see 2.38 billion, and then as of today is 3.16. So last year it was 3.6 billion. So if you disregard the recent dip, it has been on a rather stable uptrend. The net profit margin has been increasing as well. So last time was 5.8%, then right now it's close to 10% profit margin. And that's the reason why okay, let me just take away the profit before tax. That's why the profit attributable to shareholders, or like what you call net profits, have also been increasing. And now let me jump to the free cash flow part. Free cash flow. And if you know, right, free cash flow can allow you to do many things. So can pay out dividends, can acquire other companies and things like that. So for Venture Corp, they have been increasing their free cash flow from $103 million in FY 2012 to around 262 million as of June 2020. So that has been a pretty a sharp dip from FY 2017. But it across these 8 9 years, right, Venture Corp has been able to make positive free cash flow. And when you accumulate everything, right, it becomes a very powerful free cash flow generating machine. And needless to say, right, when you look at their what the balance sheet, okay, let me just go to the so you go to the total debt to equity ratio, you see that it's close to zero. And you go to net debt, there isn't anything because they are in a cash position. When you net off the debt using cash and cash equivalents. So what we can see from here is that Venture Corp actually has a very rock solid balance sheet and is a very uh, has a free cash flow generative business model. And on that note, right, I also want to just share on the intrinsic value analysis tool that we have. So if you are a Web Pro member, you can go to Screener and use this intrinsic value analysis tool. This one, there are many methods to go about valuing a stock. So you have the relative valuation, which is like P ratio or price to book ratio, and you have this kind of absolute valuation uh, methods, which is like discounted cash flow. which is over here, and also the Gordon Grove as well as the discounted earnings model. Today, I'm going to just touch on maybe the discounted cash flow model for Venture Corp. If you are interested, right, we actually are sharing a lot more valuation methods in our quality momentum online course later, which I will share with you. So now let's jump back to this DCF model for Venture Corp. Okay, I have just plugged in the numbers beforehand. So the free cash flow is auto plugged in by the system. So this is for Venture Corp. And then for the cash flow growth rate, right? From what I see when I look at the trend, the upward trend, right? I sort of like just want to assume a 12% growth rate. So semiconductor industries are growing rapidly these days, but I just want to be more conservative and put a 12%. And then I will put a 10 years of 10 years growth of 12% discount rate because they are in the tech industry, and when it comes to this kind of R&D and semiconductor space, I want to be compensated a higher discount rate. So that's why I put a 10% discount rate. Actually, in the module, right, I also share why Warren Buffett prefer this 10% discount rate as well. And last but not least, I have a terminal growth rate of 1%. And then when I calculate, right, Venture Corp give me a intrinsic value of $17.42. So, but I just want to highlight that these are based on the assumptions I have inputted into this calculator. So if you are keen, right, you can actually, sign up for our online course and then, do this valuation, and then I will guide you through on how you can do this valuation as well. So now, let me just hand over back to Sing Fu, where he will share on Sembcorp's TA and the growth aspects.
Venture. Okay, yeah, there I have it. Okay, this is Venture's chart. Now, you might be a bit confused what all this sees and what is notification. So on the Web Pro charting system, C2 chart, you can actually call out for events like corporate actions, news. Okay, so I actually plotted this corporate action and news on it because it will give you an idea of how stocks can be driven by events, what I call catalysts. So right about here, right, on the 7th of August, Venture actually announced results. And prior to that, there was a 1-month window whereby the share ran pretty strongly towards the results. This is a typical behavior which I shared during the first webinar, whereby I taught the participants that you actually can use such event-driven news flow to help you to get an edge in the market by positioning ahead of such good results. Now, how would we know whether Venture will be reporting good results? So one indication would be their earnings pattern, like James said, right? So Venture has a pattern of earnings steadily, earnings growth, and also their competitors in the US, the semiconductor companies are doing well then. So theoretically, we should see Venture continuing to report good results. So if you think it along this line, you could have positioned yourself ahead of the earnings, and have a short term gain of almost I think 15.72 to almost like $20 here, almost a 25% gain. Right. So, and along the way, you will note that the green volume bars and red volume bars, right? In general, the green volume bars are much higher than red. It shows that the actually buying momentum is there. Now, then we look at the right-hand side. Okay, this last bar is exactly what Venture traded today. Okay, what is cause or some concern is that there was a very big sell down yesterday. And following that, there's a red volume bar here, meaning there's a sell down today too. And the volume also is still pretty high compared to the past 10 days. So even before this major sell down yesterday, right, 2 weeks back, there were a few red color bars that actually there's a loss of momentum in the share because the peaks are getting lower, whereas the price is going higher. All right. So coupled with the heavy salt volume that I noticed around here, this red volume bar, and also the loss in momentum of of this indicator, and also an overbought signal of this indicator. So given the three major sources of technical data tells me that there's some kind of a weakening momentum and sell volume and venture. So I would not have bought here. Okay, I mean I didn't trade a share, but definitely, if you ask me, then I would say that the share price is overbought and is prone to loss in momentum, and the sell-off is going to be strong. So it did came down, and this is where the sell-off started. All right. So now, besides looking at technical analysis, I also like to look at on the qualitative aspect. You look at the Nasdaq, right? So in general, Nasdaq represents the tech stocks, and all these tech stocks has gone up a lot because of COVID. All right, people stay at home, you use more technology. The tech stocks has gone up a lot. So now with the announcement of successful clinical trials of the vaccine, you'll see a major shift these few days out of tech stocks and growth stocks into value counters. That's why the bank has rallied. So given this scenario, right, given this news that I observed, I'll be a bit more cautious at the moment. Now, having said that, the major support for venture at the moment is that if you go back to, say, 1 year period, you notice that there's a very strong support at $18.70 right about here. Okay, and then along the way, there's a support, right, when it broke off in August of $17.40. So first line of support will be 1870. The second line support will be 1740. So this is my conclusion for venture. Still to exercise a bit of caution at the moment. Back to James.
The first thing is, the share price has been going up recently, right? The top shareholders, right, the We family, okay, so UOB and OCBC are more like a family-run conglomerate kind of thing. So We family owns a 10.2% in UOB, and then you have other families. I think it's all the rich families. Then Hopa Corporation, which is also owned by We family, majority owned by We family, owns a 3.1% in UOB. And Wee Cho Yang, okay, the founder or the chairman of UOB, yeah, also owns a direct stake of 1.29%. So from here, right, you can straight away see whether the management team is aligned with your interests. So when the company does well, whether they make money or not, it impacts them actually more than us. Because you can see the We family has $3.6 billion worth of money at stake as compared to our investment. Yeah. So this is the ownership whereby is pretty important feature to look at whether the management team is aligned with the shareholders. And the next one I want to share is the dividend analysis tool. So if you go to the fundamental, right, there are actually quite a lot of features. But one tool that I find very useful for me is this dividend analysis tool. From here itself, right, I can straight away see the earnings per share, which is the blue color bar, as well as the dividend per share, which is the green color, and the special dividend depicted by the red color. And for UOB, they have maintained a very consistent, stable growth over the past 9 years. So the revenue have been, I mean, the earnings have been going up, the dividends have also been going up, and they have maintained a payout ratio of around 0.4 times. So this is like a pretty, good standard UOB is following. And even so, they are also giving out all the special dividends on and off. And when you scroll down, right, you can also see this dividend history table. So from year 2011, they have always been paying in June and December. The recent June, due to COVID-19, they have cut the dividends. But if the vaccine is really coming and all that, you may think that UB may have a chance to hike up their dividends again. So back like when is the previous year, they gave actually around a 6% based on today's share price. Yeah, so this is something to take note. And then the last feature that I want to share, this is something unique. So you can actually compare stocks using this stocks comparison tool that we have in WebPro. From here itself, I can compare UOB with DBS, OCBC, and even banks from other countries or other key markets like CIMB from Malaysia and Bank of America from US. And I just want to because we have quite a lot of key metrics here. I just want to go to three main metrics that are relevant for banks. So the first one is price to NAV. Let me just go down, scroll down. Okay, sorry. Price to NAV. UOB is trading at around 0.95 times price to book now. DBS 1.2 times. OCBC around the same as UOB. Okay, CIMB is at a very low price to book ratio, so it's only 0.6 times. And UOB is pretty much around the same as the Bank of America. So Bank of America is a big holding for Berkshire Hathaway, Warren Buffett, if you are not aware. Okay, dividend yield. So dividend yield, you just scroll down. Right now, the trading 12 months for UOB is 4.3%. So pretty similar to the other three local banks, and also higher than what other banks are offering right now. Okay, the last metric that I want to share is the return on equity. Let me scroll down. For banks, right, they usually use return on equity to measure how well the banks are performing. So for UOB, they currently have a 9.88, ROE versus 11 for DBS and 8 for OCBC. But it's also a commendable ratio when you compare to CIMB and Bank of America. For the same price to book, it is delivering a higher ROE return. Okay, so this pretty much sums up for me on the financial analysis on UOB.
Okay, I just share screen. This is the UOB chart. All right. Well, before I give you the good news, right? So let's go through some of the observation that we saw over the past 1 year or so. All right. So of course, we all know sometime around here in February when the lockdown, the circuit breaker was announced, there was a major sell-off in all the shares, including banks, especially UOB, the banks. Okay, so look at the volume bars here. All right, all these are very strong red volume bar. It actually gives you a prelude, give you an alert and warning that it's an impending sharp downturn coming. All right, so take a look at here. The sell-off continued until sometime in March, 23rd of March, before it rebounded and almost immediately the share went into a sideways trading trend for almost a month. Okay, there was a little bit of a rebound here, but it was short-lived. There again, you notice the rate sell-off coming in. So this is a very simple way to use volume analysis to look at the movement in the share price, how to detect when there's buy momentum, how to detect when it's selling momentum, right? And the share went off to another sell-off sometime in end July, and it stopped short here before it had a rebound, right? So you can see that these various points are actually started to form what I call a support, right? Whenever the share price reaches around $19, the share tend to have a good rebound. Reasons being probably some of the the chart traders are watching this, definitely watching the chart levels carefully around here, as well as the people who are acting on fundamental analysis, just like James has analyzed. The bank is trading at very good discount to book value, also giving out very strong dividends, although it has been cut down a little bit by the advice of MAS, right? So after this sell-off, the share actually went into a more sideways trading mode, and the volume shrunk a little bit overall. There's a mixture of red and green volume bars, so there's not much of a activity here, quite listless in fact. The share went on to make another test at the support in 19 before over the last 2 weeks or so, it's rebounded almost at $19 all the way to 21.45. So this is where it get interesting. Look at the green volume bars here. They are getting much taller. it tells you that the buyers are coming in strongly, and there was some gap right about here where the moving averages is providing a resistance. The share price actually gap up on high volume, right? So these are very, of course, we all know it was based on some announcement over successful testing of some clinical trials of some vaccines. So there is a speculation that by maybe second quarter to quarter next year, or even early next year, some of the frontline healthcare workers might be vaccinated, and to provide some kind of immunity to the masses. Right. So this is a very positive news flow, and actually changes the whole picture, technical picture of UOB. Right, from here to here is almost like sideways, um, and the news are a bit bearish now. But the economic news are still bearish now, but the share price managed to trade higher, and they broke out on very heavy volume. So this is a very interesting period. This 5-6 days, I would say that the momentum is coming up. We see rising volume. The momentum indicator on the second window here shows that the share is starting to trend. And you look at this third window right at the bottom, right? All this circuit area which I did here, right, are actually some tools that are used to time the entry levels of the trade. So if you have bought somewhere around here using such entry levels, you could have picked the bottom, right? Especially when the share is rebounding off the support, and you could have actually make a short-term gain here. Right. Okay. Incidentally, UOB announced results, and the three banks in general are not, it has all announced results, and especially DBS, the CEO has been giving a little bit of a bullish news to the market, and like Jane has mentioned earlier, the dividend has been cut this year and on advice by MAS. So, but the cash flow is still strong. If we do start to pay out the normal dividend sometime next year, you definitely see a firmer share price in the future. So looking at the, if you are into charting, you know that all these lines here, the color lines here are called moving averages. I see a very positive convergence and a cut up of the moving averages from here. We call it a golden cross. So these are definitely very strong technical buy signals. Right from here on, I would say that the momentum is trending up. News flow tend to be a bit is getting a bit positive, and there is a very strong likely potential of stronger trend upwards. Okay, thank you, James.
So I went to SPH, to grab their corporate presentation. So this is as of 18 August 2020. And okay, although SPH used to be a media company, they are now becoming more like a Singapore property holdings lah. So because they have a lot of REITs lah, they have the SPH REIT, they have the purpose built students accommodation, as well as the nursing homes under the aged care segment. So what happens is that okay, if I were to scroll down, the media business are facing what we call a structural decline, and then they have all the headcount, layoffs and things like that. Ad revenue are also severely impacted. So media business is like the legacy business that is still not turning around despite their digitalization efforts. And then for the property segments, right? So when if I were to sum up everything together, I feel that SPH is venturing into too wide uh, a segment. That means like they go into the retail malls, they go into the purpose-built students accommodation, and even the aged care. So there's no really strong focus in one particular area. And when you have one strong focus, right, that is where you can utilize all your resources more efficiently. And then you just focus on that and making that good. So to sort of like sum up their corporate profile is that it doesn't impress me lah. But now let's jump into the numbers. So the numbers will speak volumes as well. And for SPH itself, when I look at their financial analysis, okay, they have also a lot of orange and red color smileys over here. So things like decreased revenue in past 5 years, very high debt to cash flow, negative ROA. So they have been making losses in the most recent year. Um, the dividends payout is not profitable. Oh, sorry, dividends payout when company is not profitable, and then negative ROE. So these numbers, right, point to a very bleak outlook for SPH. And some investors may ask, okay, SPH have already dropped from $4 to $1. Is it a good time to buy now? No? And when they say that, right, usually what they are implying is that the valuation of SPH to them is currently um, quite undervalued. So you may think, should I use PE ratio or price to book ratio to analyze or to evaluate SPH? So, okay, just to sidetrack a bit, if you want to know more about the valuations part as well, we will cover more in depth in the online course. But just for SPH, right, I would use price to book ratio to analyze or evaluate SPH. The reason is because back in the past, if it's a media company, you can use a P ratio. Their earnings are based on the ads revenue and the distribution of all the newspapers. But right now, they are more in the property, property management kind of business. So a price to book ratio will makes more sense in this aspect. And just give me one moment. Okay, when I look at their price to NAV, it has indeed come down quite a bit from last time. From 2.8 times price to NAV to only 0.86 times price to NAV. But now you may think that SPH is quite cheap, only 0.8 times price to book. On that note, right, if you were to compare SPH to other REITs out there, do they have similar similar valuations, which is like the price to NAV is similar to SPH, and yet they are giving out stable dividends? So now we also want to compare the dividends of SPH, since it is more regarded as a cash cow kind of a property counter. And when I look at the dividend analysis tool, right, for SPH over the 10 years period, okay, let me zoom in a bit. I don't see a clear pattern of the dividends. So if you compare the green and the red, the total dividends per share, compare it to the earnings per share, the blue color bar, you see that their payout ratio, right, has been quite high, in a sense. Um, in the past 4 or 5 years, it has been reaching all okay, let me just, sorry, I used the one with the special dividend, so it makes more sense. Okay, if you include the special dividend, right, actually the payout ratio, the dividend payout ratio has always been very high, like 0.8, 0.9 times. And then when the earnings for SPH drop, right, from here the earnings per share dropped to 22 to 17, then to 13, and this year is -7. Their dividends will also be impacted. And if you want to further analyze on the dividend trends, you can go down, which is what I like to do. I go down to the dividend history table, and then I see whether there's a trend over here. They may say that due to COVID-19, that's why SPH is cutting down their dividends. But if you look at this one, right, they have been giving out 7 cents for February, and around close to 9 or 10, 11 cents in August. So when you add up, right, they have been decreasing their dividends payout as well. So from the start of 2016, they have been going down to 6 cents, 5.5, and due to COVID, they are further taking a drastic cut to 1.5 cents for February and 1 cent as of August. So you may ask whether the dividends may rebound again. For that, you will need to look at their debt and how they have performed. They are going to perform in the future. So with that, right, I'm done with the analysis
All right, this is the SPH stock chart. If I zoom out, okay, yeah, you can see that actually it was a huge downtrend for I think almost the past 4 years due to the change in the competitive competition in the industry. Right, people are switching away from physical newspaper. They depend more on Facebook, social media for news, and the advertising revenue has been diverted to all the online medias. So and the SPH has not been able to capture the change in this industry trend. All right, so this is the fundamental part in analyzing the business model. So James has rightfully said that the company is not doing well, and it's actually reflected in the share price. So one thing I like to teach students is that, or learners is that, you don't just look at the technicals. You need to understand the fundamentals behind it. So no amount of technical analysis, right, can actually force a deteriorating fundamental stocks to go uptrend. No way, because at the end of the day, it's the fundamentals that determine the company share price. Okay, so it will give you the flavor, the value of the company share price. But fundamentals will allow you to have a disciplined way to stay in the trend, to find for low risk entry point to enter into stock, so they can have a higher chance of success. So how do we analyze the stock from here? All right. So one lesson to take off is that you look at this second window here where you have this black and red line crisscrossing each other. Just concentrate on the black line. All right. So once the black line drop below the zero line here, the trend tends to be negative. That means downtrend. So if you have stayed on the right side of this trend, meaning this downtrend, you have totally avoided the share. Okay, you could have avoided a share since it was $3, right? Even right about here, almost like beginning of this year, it was $2. The share, the black line over here, the momentum line went below zero, and it stayed zero all the way to now, all the way to now. All right, so $2 from to one, right? If you have the share, you could have cut it, or you should have stayed out of it, and you save a lot of money from here. All right, 50%. So one thing to understand in trading, in investment, is that never allow a loss to go into deeper loss, especially if you understand the fundamentals, especially you are looking at the technicals, and yeah, there are tools to help you to keep you out of trouble. All right, if a share drop from $1, 100% to 50%, that means $1, say for example, $2 to $1 like SPH, you lose 50%. To find another stock that goes of $1 back to $2, 100% gain is very, very difficult. So it's very difficult to recover your capital that way. So one lesson to take from this is that to avoid being caught in the downtrending stock, whether you have the share or whether you're looking to buy the share, you shouldn't be buying a share when the momentum indicator is below zero and the trend is trending down. All right. So along the way, people tend to, when they buy stocks, some people tend to look at it like a Robinson sale. All right. The share was trading at $2. Now it dropped to 150. It's 25% off. So it's cheap. I should go and buy. In fact, at $1 now is 1 for 1. So you keep on buying the share without looking at technicals. You actually will burn a big hole in your pocket. Right. So don't try to catch a falling knife, especially the fundamentals are deteriorating. Let the share price tell you when to get in. Now, at the moment, if you look at the overall picture here, it doesn't look good, right? So there were company shares buyback along the way, but it couldn't help. You look at the Web Pro, it tells you that there are a lot of company shares buyback. Right. In fact, the company is throwing money, in over bad investment. All these buybacks here didn't help. The share price went into deeper downtrend, right? Heavy selling here, and the overhead resistance are provided by the existing exponential moving averages. So all these are not good signs. So take a look example right about on the right hand side, exactly where we are now. There was a major rebound in STI index these few days, but what did the share do? It stays at $1. This is an example of what I call low relative strength share. The share is actually, compared to the index, the share is actually performing badly compared to the index. The index went up, the share price didn't go up. So this is one lesson that I shared during the first webinar, the concept of relative strength. This would tell you whether the share price has a high chance of outperformance or whether it's going to be a loser. All right, so technical indicators and technical tools actually help you to stay on the right side of the stock, the right side of the trend, to avoid losers like this, and to be able to capture winners like what we see in Sembcorp, what we see in iFast, what we see in Riverstone. All right, so as much as it's important that we try to find stock that can give us a good rally and be profitable, we should also must remember that to avoid shares that are dropping badly, avoid fundamentals deteriorating stocks, and avoid shares that are in a downtrend. Okay, so with this, I will stop sharing and I'll pass it back to James.